Hello and welcome everyone to Gold Asset of the Day for the 8th of September 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, what do you need to be aware of? Well, I hope you've now observed the typical post-Labor Day public holiday in the USA sell-off for the precious metals. We identified this with you last week on Gold and Silver Asset of the Day, and also on the week ahead commodity report to expect liquidations during thinner liquidity on the Monday through to Tuesday. Typically, you're going to see the dollar pick up momentum and you're going to see a sell-off on the precious metals. Gold prices, they dropped 1.5% to the downside after the typical setup that we get into the non-farm payroll data, which was to see a breakout to the upside back towards multi-month highs, which would trigger many traders to FOMO in. They get the fear of missing out. They buy too high. Very simply, they get trapped buying at the highs as you go into a public holiday in the USA for Labor Day, and then many traders get liquidated, and that causes a further acceleration to the downside, exactly as we've seen on gold over this week. The playbook that we discussed with you has played out perfectly. So ourselves at the Gold and Silver Club, we were able to lock in 900 points profit on Friday with gold as it broke out to $1,830 per ounce. So we banked at the highs, played the entire breakout to the upside, take our profits off the table. We've also taken on 3 positions on the dollar. So that's enabled us also to take advantage of the strength on the dollar that we've seen this week as markets have shifted back into risk off. And that's how we've been able to play and capitalize on the market volatility over the last couple of sessions. So I hope you've been able to capitalize on that too. Again, we've seen many traders out there, unfortunately, they've FOMO'd in, they're bought at the top of the move, utilizing outdated technical gimmicky indicators, strategies which just do not work in these market conditions. Feel free to go back, watch the week ahead commodity report, watch last week's gold and silver asset of the day when we identified exactly the playbook that's just happened, this whole move with you, and how you could take advantage of that step by step. So as we head into a new week here, what else do you need to be aware of? Well, we do have the European Central Bank announcement now at the end of the week on Thursday. So you can expect definitely big volatility off the back of that. Also in the last week, hedge funds and money managers, predominantly they do remain long on gold. So of those that have a position, 71% are long. We've not seen much change at all with respect to that data in the last week. However, overall expectation has been over the month of September, you could see the metals under pressure. We expected them to perform well last week. We hit the exact ranges that we discussed with you just 1 week ago with gold, which was to be range bound between 1800 up towards the 1830 zone. We hit both of those levels spot on, which again enabled us to bank 900 points profit. So of course, for every 1 lot contract that you'll be trading with a 900 point profit, that's $9,000. And for every 10 lot contract that you'll be trading, that's $90,000 of profit that we've been able to bank there on gold just last week on Friday after the non-farm payroll data. So again, coming back to this week in the European Central Bank announcement, we are expecting volatility on that later on in the week. Again, I would watch out for the potential for a post-European Central Bank move on Friday. Normally it's as we go into the US session on the Friday, you can get a bigger delayed move and more exaggerated moves in the market later on in the week. This has been the same with FOMC statements over the course of this year, that typically it's the day afterwards that you see the bigger, more pronounced move in the market. So I'd definitely watch out for that later in the week on Friday. But so far this week has played out exactly as we expected. I hope that many of you have also been able to capitalize. And again, this comes down to understanding capital flows in the market, the daily, the weekly, the monthly, the quarterly cycles, especially tracking those for each commodity. Alongside that, understanding the intermarket correlations, the ratios in the market, marry that up to with key areas of liquidity, have understanding of the macroeconomics, the fundamentals in the market, and of course understand what the hedge funds, money managers, banks and institutions are doing, how they are positioned in the market, marry that up with data, market intelligence, statistics, the facts in the market, and the news items that will be catalysts for the biggest moves for commodities, and that will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click on the link below today's report in order to make an application to join our professional mentorship program.